Good morning, everyone. How is Prague going? Come on, we're doing it again. How is Prague going? Let's go. OK, so I have a question for you. How much money there is floating around the markets right now? How? Give it a shot. On the overall, on the globally. 1,000? Any other shot? 3? OK. A bit more, quite more. So currently, there is $265 trillion floating around, where fixed incomes represents 53%, which is around $141 trillion, and the rest is public equities. So as we have Ethereum community here, on-chain, there is only about 1% of those money going around, which is in the last update on May 25 is 3.37 trillion. The big majority is on Ethereum, and the rest, mostly of them, is in Ethereum, in Bitcoin and then Ethereum. So imagine you are in an ocean. You picture the ocean. So you see the corals on the bottom, or the very bottom. This is what there is on chain. So there is plenty of ocean to explore. So talking about exploring, we'll explore how TradFi is implementing DeFi. So at the end of these 20 minutes remaining, we'll talk and you will learn about how is working currently and how has been working, what banks and financial institutions are doing into the DeFi world, and how in our side, in Cambridge, we are leveraging this power to make a transformative financials. And then if you stay at the end, just before Aya speaks and Vitalik turns, I will give you, to the builders, a playbook on how finance can be in 2030 and what we need to take attention to. OK, let's start. Are you ready? OK. So securities are not as fast as you think. Firstly, you imagine you have an NVIDIA stock. OK, now the NVIDIA stock will not pump up. I do imagine. Don't buy NVIDIA stocks right now. OK, so you have NVIDIA stock, and you want the first step would be for traders to agree on a price. Are we OK? Yeah? So once agreed, they need to pass through the clearing process. The clearing houses has the information about who owns those stock. And imagine, the stock itself and the money and the cash is completely on different legs. So in one side, we have the asset leg, which is currently managed by central security depositories. And then we have the other cash leg, which is managed by the real-time gross settlement system. So imagine, so first of all, the asset is going into the securities and is settled. Then we have the payment process. This, to get reconciled, it takes now until 2 days. We have clear pain points here. The capital is locked during 2 days. The BIS has made a report, the Bank of International Settlements, announcing that locks $100,000 billion dollars every month. Then we have the chain of intermediaries. What happens here? So imagine, and you picture, there's a lot of different intermediaries. You have the there's a repository, the real-time settlement company, the clearing house company. So all of these create a credit exposure, a counterparty exposures that needs to be accounted in the pricing of the assets. So as a result, we have a higher financing cost. Not speaking about the separate reconciliation trades, the different hours of trading worldwide. If you want to exchange an asset in Asia, you need to wait until the opening of the American market or the European ones. And of course, every single transaction should go through a manual process. So it has a high cost. But of course, who are the first ones to find a solution here? Prague, come on. Yes. So the first ones, the obvious solution here is how to use blockchain into that. So, and the first users, of course, have been the financial institutions. So how DeFi companies or TradFi companies are using DeFi? So currently, we have 2 out of 3 companies, financial institutions, looking at and making DeFi pilots. The first ones, the most obvious ones, and the one that has brought the adoption was the stablecoins. We have financial standard chartered that made one of the first stablecoins. And then we have now currently going on a consortium in the US that is bringing all banks together, led by Bank of America, to make a single stablecoins to trade between each other, so they can make trades much faster. Then we had BlackRock that came and proposed his solution. The tokenized securities and the money market funds. And then we had Polygon that entered the market with Franklin Templeton. So this picture, the first picture you should have on thinking about tokenized securities and money market funds is that when you have an asset, when you buy an asset, and if you are currently doing it with the stablecoins, the stablecoins is not on your asset balance sheet because it's from another company. So what if a bank creates its own proper stablecoin internally, and then so we can reduce all the risk from other stablecoin issuers. So this is how BlackRock is using it. And then we have the tokenized deposits. This is JP Morgan is the best, the first to explore this solution with Citi, where if you don't know yet, when you deposit something in JP Morgan, it's going to be transformed into a token. Internally, inside the JP Morgan company and all the subsidiaries, it's going to be a token going around. It's not your cash, dollars, or whatever. Once it goes out, it gets retransformed. So imagine, we have huge opportunities here. We are transforming the cash, the assets, into tokens. And of course, here in Europe, we have ENG mentioning that the stablecoins are our bridge until tokenized deposits mature. Of course, when you use stablecoins, you're relying on the other issuers, so you need to use your own proper solutions, so you do not rely on others. You have BNB mentioning that public chains / intraday liquidity cost, since we have liquidity, most liquid pools. And Union Investments mentioning that tokenized market funds will outcome non-yield stablecoins. And now it would be quite strange to see the Genius Act announcing that some stablecoins will be able to issue a yield So banks are already anticipating this movement and are looking forward to develop their tokenized money to make and to take advantage of this yield bearing. So, of course, now we have not a settlement party that takes 2 days, but just only 30 minutes if we do it in an EVM. Then we have not anymore much intermediaries, but we have a more resilient and strategic autonomy on the bank's point of view. And the most interesting part for financial institutions is that we have a 99% reduction cost. So how is simpler, isn't it, with DeFi? How was all this process can be done with a single settlement contract? So this is how, and for the first time in finance, there is like a little door opening to be where DeFi can be and can enter and rechange how finance is doing. And and just in addition to all those reduction costs, we have new possibilities. We have a network effect, having liquidity, deeper liquidity pools, having transparency in all over the layers, from the developers that create the smart contracts, the auditors, and the regulators. Then we have a new possibility of creating assets, bringing liquidity to illiquid assets. So think about real-world assets, carbon credits. So, and how Cambridge is doing that? How are we seeing the DeFi into some future? So at the Cambridge Center of Alternative Finance, our mission is to create and transfer the knowledge to make better regulation, better future regulation that is adapted to the nowadays technology advancements. So our core mission is to make research, to build digital tools, and with all this knowledge, we are providing courses, and we have formed, giving classes to more than 4,000 regulators and central bankers all around the world with our fantastic sponsors. And so what we have been working on, and precisely recently on these DeFi advancements. So we have seen some gaps. We have, speaking with regulators, central bankers, we have identified that their main purpose for not adopting DeFi protocols is for not a clear DeFi taxonomy. So when a bank wants to invest, wants to put money into a DeFi protocol, should have a clear DeFi taxonomy. What is the regulation expected? What is the expected outcome? And how I can make sure I'm not doing illegal things, because they have a strong reputation to maintain. So we have identified there is no global accepted digital taxonomy, a DeFi taxonomy. And the ones that exist, the academic ones, are static. They are not following the process of AI agents, new DeFi solutions. And there is a clear gap between DeFi and TradFi on the regulatory terms. So our goal and what we have done is to bridge the gap that can be easily understood by regulators so they can make better regulation to adopt DeFi. So in 2020, 9 protocols represented 90% of the Ethereum. Now, well, last year, in 2024, 190 protocols constitute of 90% of the Ethereum protocols. Okay, so we have a big growing trend. We need to do something. We want to give the opportunity to these protocols to be adopted, to have the big money, to have the 97% of the other market assets liquidity. the big money they needed to grow. So we have analyzed 98% of the Ethereum protocols, around 200. We have gone one by one looking at the white papers, the governance structures, and their smart contract details. So, and we have made the AAA taxonomy. This taxonomy represents a clear framework for regulators to adopt and regulate accordingly the DeFi. So we will have in the first the activities, then the actors, and the assets. Because not all DeFi protocols should be regulated at the same. One lending and borrowing protocol cannot be regulated at the same as an insurance, cannot be regulated as any other credit carbon protocol. So they really need to be separated and have their own regulation. So we have thought about the regulation perspective, who and what should be regulated, so it's easier for them to create and debate. We have as well made a parallel on the ISO frameworks. They are super comfortable with ISO. We need to adapt to them so they can adopt it. And we have covered 98% of Ethereum. So here's a demo of if it's a video, can you click it? Yeah, it's a video, so I think you can click. No, it doesn't work. OK, no worries. So, there is at the CSAF.io, we have made a dashboard where at the center, we just do not make papers or courses. We do also do tools. Tools that are free for everyone to explore, and we have put all our knowledge, all our outcomes into a dashboard, an interactive dashboard. In this dashboard, you can see how the different lending and borrowing, or all the typologies of the taxonomy, DeFi taxonomy. You can see all the inflows, the value flows in all, in real time, the inflows of each category. You can see how is currently adopted, their governance perspective, who owns the tokens, who owns 1% of the of the governance tokens, which is where you can see who decides the governance perspective. So it's a very used tool nowadays for regulators to write actually how it's going to be in the next years. You can go into the protocol deep dive, where we have made an audition. We have audited all the protocol and ranked them, and made a clear perspective and outcome on which perspective and why we have decided to put it in that category or not. So some takeaways. What we have done, we have transformed chaos into clarity. So the real money can go into DeFi protocols. We have seen how the activity is, where the value is, how is it distributed, and how the value flows between each of in real time, how the real value flows between each category. Then we can see who has the supply, who has the demand, and how the governance architectures and mechanisms are. So let's take some real use cases. How are the bigs using the DeFi? So we have Uniswap. Uniswap, if you don't know, made a partnership with BlackRock. So BlackRock will take some USDC and create their token fund, the famous token funds ETFs from BlackRock. So they can mint their treasury bill, and the settlement is done in less than 30 seconds against the 2 days of TradFi. The other side, we have other examples, such as Citi and UBS making cross-border atomic repos. So the first step is that Citi will tokenize the US Treasury, such as BlackRock is doing. Then you will have another bank, in this case is UBS, that will take the role of counterparty. So Citi will go and says, OK, I trust this smart contract to make all the transactions. And the cash leg and the asset leg are all put together on the same smart contract. And everything, all the settlement system is done fully on EVM in less than 30 seconds. And on L2, so maybe even less with the Ethereum progression. So, OK, we are reaching the end. What's the playbook? How Cambridge is seeing the next finance role? How it will look like? How TradFi and DeFi will look like in 2030? The next trillion is going to be unlocked. We want it or not, TradFi it will be used the DeFi rails. OK, as a perspective, as a developers, we have an advantage. We have an open door that is going to open. We can explore embedded compliance by design systems. Let's explore ZK QICs, CCIPs. We need to build into open standards. And of course, we need to bring liquidity into illiquid assets, such as carbon credits, intellectual property. All of those can be created and can bring liquidity. And so, yeah, since 1977, which is the date where Cobalt has been used on the TradFi, yeah, it's finally the moment that Cobalt will be replaced, and it's going to be replaced. So, yeah, as developers, take this opportunity, which is a unique moment to go, because all the assets will move into smart contracts. It's much easier, simpler, and most importantly, it's going to be cheaper. And banks and financial institutions likes when there is cheaper cost. So it's time to rewrite finance, and hope you have learned something. You can, by scanning the QR code, go into the open for free DeFi dashboard. And yeah, I'm Carles Cerqueda, DeFi researcher at the Cambridge Center of Alternative Finance. And I hope you have learned something about TradFi and DeFi rails.
Right. Yeah. We have a couple of minutes, so we have questions.
Really great talk. It gives me a lot of confidence that what we're doing here is worthwhile. So thank you so much for you and your work. Question I've got, I hear a lot of people talking about privacy being something which is blocking institutions from adopting blockchain technology. I don't see any mention of privacy in your talk. Perhaps you're focused on different things. I just wondered if you have data points or something to add on that front.
Yeah, indeed. So it's a current challenge. I was speaking with banks, and they are looking at it, and it's the main focus of not massive adoption as well, after regulation, of course. Because when you make a transaction, your competitor will know what you are going to do, and then you can scan patterns, you can anticipate. So yeah, ZK. It's going to be a solution to that. We have big companies working on it. And they are mostly and exploring the trusted environments. So they will provide a solution. And lots of good researchers and cryptographers are working on it, mainly in Greece and in Cambridge as well.
Any other questions? Don't be shy.
Yeah. So thank you for the presentation. You've mentioned, for example, JP Morgan, which uses tokens internally. Correct me if I'm wrong, but I think this is like a permissioned blockchain, right? A private one.
No, it's a private one.
Yeah.
Because, yeah.
Yeah. So what are the challenges or trade-offs do you think so that TradFi becomes like on public ledgers and not on private blockchains?
Yeah, the other question is about revealing their assets and revealing what they are doing with their money. Because the secret of those financial institutions is how they manage the money and how they get the best money of your deposits. And this is the secret sauce. They don't want to reveal it. If they go in a permissionless, without ZK proof or any privacy trusted solutions, they are not going to go in, and they are going to stay in private blockchains.